Mnuchin headlines, getting something done in terms of stimulus by the election, he says, is tough. That caused a bit more of a sell-off in stocks, and it underscores why the NASDAQ continues to have a bid under it.
Yes, it does, clearly, and you're also seeing a little bit of a fallback in yield, Scott. The 10-year is pushing back towards 70 basis points, so that is somewhat troubling. Look, I would think the market needs a little bit of some of the forward momentum that it's been carrying in the last week or so to really cool off a little. I think we were getting a little too vertical in the way that we were appreciating. So the negative news that you're getting on the stimulus, it aligns with maybe a much needed little bit of pause in that rate of appreciation. I'm not overly concerned by it.
Yeah, rates are falling. You see it there. 71 basis points is where we are on the 10-year. That's an issue to deal with, perhaps, Tiffany, or at least what that message is in the fall in rates. Everything's coming down, though, apparently, on these Mnuchin comments. But it's more broadly and it's lately where, Tiffany, tech has continued to get this bid. But you're looking at what would be helped by stimulus. J.P. Morgan, Disney, FedEx, UPS, all things that you've added to recently.
Yeah, so we've definitely added to those positions, and for different reasons. So, you know, I've spoken about J.P. Morgan quite a bit on the show. We definitely like their diversified revenue stream. They had a really great earnings day yesterday. We expected that, so we did buy ahead of the earnings announcement. And so, you know, banks really kind of having an interesting week this week. So, you know, we also like Goldman Sachs. We own it. They had a favorable earnings report, but we're kind of getting back to what you were saying, Scott. We're being very, very selective about what we're purchasing. FedEx, Disney with that big announcement, I believe it was yesterday. We really do believe that there are certain names that are well positioned to do well going forward, not just in a pandemic versus non-pandemic environment, but we really do believe that the world has changed with COVID-19, and we definitely have a new normal. So who is going to be best positioned? What types of companies are going to be best positioned to take advantage of things going forward? Yeah,
well, I mean, certainly, Jim, we get the Zooms and the Pelotons and the CrowdStrikes, which Peloton and CrowdStrike basically hit new highs today. All of those stocks have had a tremendous run now in the month of October. Peloton, which got a positive call today, is up 34%. Cloudflare, 44%. Fastly's 36%. I could go down the list. But is it now that cut and dry for investors watching this program? Stimulus, or apparently, on a positive track towards stimulus, means you buy the reopened stocks, and as long as we remain at an impasse or with an inability to do anything before the election, you just continue to buy the stocks from tech, from high growth that have gotten us here in the first place?
Well, it's yes is unfortunately the short answer. Now, let me add to that. The other factor here, which is weighing on the markets, is the lack of progress on a vaccine. And we obviously had some disappointing news yesterday, both from Johnson & Johnson and Eli Lilly. And the point being this is that the market is swinging back and forth. Scott, it was only 2.5 weeks ago that we were in an actual correction. We were down 10% from the high. That's almost entirely been recovered. And that's mostly been on the belief that stimulus would come. Now, I think the way you're supposed to play this is not to lay all of your bets on the Pelotons and Fastlys and Zooms of the world, nor are you supposed to place all of your bets on the airlines just at the other end of the spectrum. What you are supposed to do is believe that stimulus is going to come at some point in time. Probably not before the election, but after the election, highly likely. Similarly, a vaccine, nobody can time it, okay? And we might not even get a vaccine. It might be a question of just getting suitable treatments. When does it come? Nobody knows, okay? But you should bet on science here that we are going to cure this thing. In order to enact this in your portfolio, what you have to do is not trade on this week's headlines, but trade on where the market is going to be 6 months from now. 6 months from now, it should be in a full recovery. It doesn't mean sell all of your stay-at-home stocks. It means have a balance between some reopening names and a lot of the tech stalwarts that have brought us this far.
John,
have a balance in your portfolio.
As long, John, though, as stimulus remains elusive, can you feel confident buying anything but growth tech?
The confidence level goes up, of course, with some sort of agreement, some sort of I don't even know, Scott. I mean, I'm so frustrated by the lack of this stimulus. But let's focus on your questions about where we can actually make some money here. FedEx, to Tiffany's point, is one of the best performing stocks. New 52-week high today. She is exactly right. I'm lucky to have it in my portfolio as well. It's even outperforming the likes of Apple, Scott. So this is a stock that will do well regardless of if we get that stimulus or if we don't. Now, certainly if we do, Scott, obviously we need a vaccine and stimulus to have the airlines and the consumer-facing stocks, the direct face-to-face, where you walk into a restaurant, into a hotel, onto an airplane, onto a cruise ship. We need a vaccine as well as stimulus to make those much more attractive, Scott. But I think a stock like FedEx is just going to continue to outperform even some of the best performers among the FANGs, quite frankly.
Yeah.
Now, yeah, you're going to have, the Netflixes and the Teslas continue to do well as well, I believe. But FedEx, that thing's just got a tremendous balance sheet and demand like crazy, Scott.